A global financial crisis is still upon us. Nothing has changed from what happened back in 2008. All of the problems are still there, and many have been exacerbated. I will tell you why today this financial crisis isn't over. Let's take a look at the stock market. The Dow Jones, the S&P are hitting record highs. What does that mean? That means that money is pouring into the stock market in search of a place to go. Now, when you print trillions of dollars, it absolutely has to go somewhere, and it has been showing up in the equities markets. That I can absolutely not deny. Now, there may be excellent stocks that over the past few years people have been profiting from. I tell this to my clients in all my consultations. You can make money off the stock market, but it is a very risky game. You have to know what you're doing, and always you will need to basically play that risk reward scenario, and you will be playing in their game, because guys like Warren Buffett, they know before the crashes, so they pull out, so they feel confident pouring billions of dollars in. Do you have that same mentality? Let's take a look at this one. Google, likely $1 trillion company. They're saying that the valuation of this company, the market capitalization, could be over $1 trillion. They're saying that this is the biggest tech company to ever exist, and so on and so forth. So there is a lot of money being pushed towards tech stocks currently, and let's continue on. Another thing that's happening is that the global mergers and acquisitions are at a 7-year high. This is really sparking the economy and allowing them to sort of see that the economy is boosting and that the stock market is going up, and a lot of that has to do with the mergers and acquisitions that have been going on at a record high right now. Not an all-time record, but in recent years at a record high. Let's take a look at this. Nokia scales the 52-week high on share buyback plan. So this is another thing that's happening that's also boosting the economy or boosting the stock market, is that they're doing share buybacks at a big time rate now. And a lot of economists are calling for these two things, saying that the share buybacks and the mergers and acquisitions are a big reason why the stock market is increasing nominally, is because of these, not because of real fundamental issues. Now, this is what concerns me. Fed kicks off the dollar squeeze as Janet Yellen turns hawkish. So they're saying that they printed up $3.5 trillion, bought some garbage bonds, and that they are, they cut the interest rates down all the way. My concern is this, something I talked about in my book, and something that I basically talked about in all my consultations, on my videos. You've seen it here, is that as soon as these interest rates begin to rise, you're going to have mass foreclosures existing. This is going to go worldwide because the Federal Reserve is loaning money to countries and companies all around the world, and doing so at essentially 0%. But now, if there's an interest rate going to be charged, nobody's going to borrow, and that is going to be a big damper on the economy. There will not be any growth if they do increase the interest rates, and already technically the interest rates are negative because when you factor in inflation, even the fake inflation. So we have to keep an eye on interest rates. That is the most important factor. I did a little diagram, simple diagram in my book, and you could see the stock market and the interest rates have a negative relationship here, that as soon as these interest rates go down, the stock market comes up. And of course, when those interest rates begin to rise, the stock market crashes. It happens over and over and over again, and pretty much every time in history they do this, and especially since the Federal Reserve has been enacted, they have done this, and it has done nothing but crash the economy. And take a look at what's happening right now. The economy is really, the stock market, I should say, is overheating, and it seems like as soon as they bring these interest rates to a higher level, we're going to have another crash. Let's keep an eye on the interest rates specifically. I hope that you like this video and that you're sharing all of my videos. I appreciate that. I see when you share them. Thank you very much. Thank you for those who have purchased the Money GPS, and it really helps me out a lot. The insiders, I should mention, is I just got the bill again today, and basically that you have to continuously, as the subscribership grows, you have to pay more. So I just got a nice little bill. But regardless, I want to thank all those who have joined up on the insiders and who have given me the praise on there. I really appreciate all the kind words that I've been getting from the insiders. So if you want to get in touch with me, that is the best place. So it is themoneygps.com at the bottom. You scroll down there and you fill in your email address, and you get occasional emails from me with short, concise info.